Now, I don't want to get ahead of myself, but when I look at silver today, up over $1 to 31 and change, 31.20. I think it is one of these days that is exactly what is going to happen, is that they will let it run to the upside, realizing that the only way to manipulate a market down again over an extended period of time is to push it in the direction that it is going. And I think they are realizing this is a game that is crossed the line of being foolish and is now into, sink or swim. And I also think we will witness a period of time where all of these commercial banks start to eat their own.
In a move that took Wall Street by surprise on Wednesday, the U.S. Federal Reserve cut its benchmark interest rate by 50 basis points, the first rate reduction announced by the central bank since March 2020. While the market had been anticipating a rate cut announcement at the end of the Federal Open Market Committee (FOMC) meeting, most market participants had anticipated a 25 basis points rate cut. There are speculations that calls from people like Senator Elizabeth Warren may have influenced the FOMC's decision. In a letter to Fed Chair Jerome Powell on Monday, Warren and two Senate colleagues urged the central bank to cut rates by 0.75 of a point, warning that the Fed is causing unnecessary damage to the job market by holding rates so high for so long. While Senator Warren and her colleagues, Senators Sheldon Whitehouse and John Hickenlooper, would have been soothed by the Fed's half-a-point rate cut on Wednesday, several analysts and financial commentators have pointed out that the Fed's decision might not have been the best move for the U.S. economy. According to renowned economist and gold bug Peter Schiff, the Fed's rate cut spells economic disaster for the United States. In a social media post reacting to the Fed's rate cut announcement, Schiff wrote, "As expected, the Fed caved to the markets and cut interest rates by 50 basis points. Not only will this round of rate cuts not stop a cooling economy from entering a recession, but it will also turn up the heat on inflation, making the recession that much worse." Schiff pointed out that we are already seeing signs of the US dollar weakening and assets like gold strengthening as a result of the Fed's actions. Not only did the Fed's 50 basis point rate cut send gold to a record high above $2,595, Schiff began in a follow-up post, but it also sent the US dollar sinking below 0.84 Swiss francs, a new 13-year low. What should be even more troubling is that long-term Treasury yields rose. It's game over for the Fed. Like Schiff, Miles Franklin President Andy Schechtman believes the Fed has made a wrong move that will be tragic for the US dollar, but very beneficial for gold and silver prices. In a recent interview with Liberty and Finance, Andy shares his views on the Fed's rate cut decision and how it has impacted gold, silver, the US dollar, and Treasury yields. Like Schiff, Andy warns that all of these signals show that big trouble lies ahead for the Fed and the US economy, and very good times for gold and silver. As we present clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate your support and hope you enjoy the video.
I just think it's absurd that the way that the Federal Reserve and their open market committee applies what they believe is the preferred rate for millions of savers and borrowers and spenders and manufacturers and on and on and on. And I guess to me what I find most humorous is how they are trying to gaslight us into believing inflation has been defeated. And it's important to understand that the CPI is a worthless statistic, and it's intended to conceal the debasement of the currency, and it's happening at a rapid pace. One of the things I found very interesting about the 50 basis point cut, you had everyone saying 25 basis points, maybe 50. We go all the way back to the beginning of the year and see how many times they've changed their strategy. There wasn't going to be any rate cuts. There was going to be 4 rate cuts. And here we are. We finally got this rate cut, a 50 basis point. And here we are. We look at gold. It's up to basically its all-time high today. Silver's up back again above 31. But one of the things that I found interesting is that actually Treasury yields went higher on the back end of the curve, and that to me signals big trouble ahead for the Federal Reserve. If they're lowering rates and the back end goes higher, But that's the way it should be if you're thinking logically that a government has given in to inflation, raised the white flag, and said, we're going to focus on our dual mandate of full employment, which is a bunch of nonsense. And in essence, they're doing what all governments have done. They're giving in to inflation and taking the easier path rather than tightening their belt and choosing austerity. They have done what all governments have done, and they have pivoted. And it's I don't know. I think ultimately this leads to some real problems as we continue down the road. I found it also interesting too, just in reading some articles last night about John Paulson, the billionaire hedge fund manager, who has finally said what others have figured someone like him would say, and that is that if Kamala wins the presidency, he will pull $9 billion in assets from various sectors because of what she is proposing, in particular, raising the capital gains tax, raising the corporate tax, and introducing a 25% unrealized gain on people just like Mr. Paulson. And he warned that if she were elected, that this would lead to mass selling and market crashes. And we've been talking about that. There's no question. But the bottom line is that when I look around, I see that we are at a point right now, Dunnigan, where there is no escape from not only the constantly depreciating currency, but also from this massive debt, that burden that we have that continues to grow. And I think they figured that, well, this inflation, which is a hidden tax, is a lot easier than continuing to raise taxes. And this is done at a time when, our stocks are up around all-time highs. Our deficit is at all-time highs. We've redlined the national debt. And then you get these fake numbers like the CPI and the jobs numbers. And it's very difficult for the average person to understand exactly what is happening. But when you talk about these fake numbers like the job numbers we talked about last week, 1.3 million Americans lost their jobs, replaced by 635,000 people, most of which were in this country illegally, and part-time jobs at that.
Shortly after the Fed's rate cut announcement, gold hit a new all-time of $2,600 on Wednesday. Andy expects significantly higher gold and silver prices before the year ends as investors realize we are in the final innings of the fiat-based financial system and rush towards safe haven assets like gold and silver. The renowned bullion dealer says the rush will be so powerful and unexpected that even powerful bullion banks that have been suppressing prices will be unable to stop the sudden price increase when the rush begins. When that all-at-once moment begins, Andy envisions that the bullion banks will be forced to make sudden moves that are antithetical to the downward suppression we've seen over the past decade. Instead, they will begin to manipulate prices upwards as gold and silver again become the sole focus of the global financial system. Let's get back to the video.
Switching gears just a little bit to gold and silver, just a couple things I want to talk about, and we can move on. We've talked a lot about over the last few years of India importing copious amounts of silver. And, their gold numbers are up very high also, but India looks at silver in a very strategic manner. They imported almost 46 million ounces of silver just in August. That's around today's numbers. That's worth about $1.3+ billion, over 45 million ounces of silver in the month of August. And you annualize that out, they are continuing on a pace that is literally draining all of the exchanges. And you wonder how long the 6 or 7 or 8 commercial banks who have been short are able to continue to play this game. It's interesting, and also in looking at the commitment of traders numbers that just came out, it's as if the commercial banks are pivoting and changing the way that they are doing things. They are covering their positions, and they covered quite a bit recently, just the other day. And I noticed in looking at where the silver came from, it didn't come from the managed money. In other words, the managed money are usually the ones that sell the silver to the commercial banks. In essence, it came from the producers this time, meaning the managed money wasn't selling, and the commercial banks pickpocketing them the way that they've been doing for a very, very long time. In this case, managed money said, no, we're not going to sell that silver to you. And it was purchased by the producers. This is telling me that we are getting very close to that moment where the commercial banks realize that being short, naked short, in a market where a country like India can import 45 million ounces of silver in a month is as stupid as a mud wall, and they're going to bail. And we can see, it seems as though, almost as though that's indeed what they are doing. Now, I don't want to get ahead of myself, but when I look at silver today, up over $1 to 31 and change, 31.20, I think it is one of these days that is exactly what is going to happen, is that they will let it run to the upside, realizing that the only way to manipulate a market done again over an extended period of time is to push it in the direction that it is going. And I think they are realizing this is a game that is crossed the line of being foolish and is now into, sink or swim. And I also think we will witness a period of time where all of these commercial banks start to eat their own. It will not be about a coordinated, collusive agreement the way we've seen these 8 banks short on your interview with Ed Steer and the chart that we talked about a few times now. It appears as though they've been doing this in a coordinated, corroborated fashion, and I think that will change. They will start to realize it's every man for himself. One last thing I want to talk about is gold. And, we talk a lot about Saudi Arabia. We talk a lot about gold importation by these countries, a lot of de-dollarization. And it just came out that the Saudi Arabian Monetary Authority secretly, and that's the key here, secretly purchased 160 tons of gold from Switzerland. And that was discovered because of the import data that goes through Swiss customs data. Now, most of these governments, I would argue, have been secretly purchasing gold and silver and all sorts of other de-dollarization techniques for the better part of the last 3-4 years. It's just this time the Saudis got caught with their hand in the cookie jar. And, again, in the month of August, massive imports, 160 tons of gold in the month of August. Well, how much more did they get away with that people didn't catch, or that the customs data didn't report, or that was purchased through sovereign wealth funds, through different channels that are not reported to the IMF or through customs data? I would argue quite a bit.
Andy believes central banks are about to pull another Hunt Brothers moment with gold. The only difference is that these are the most well-informed investors on Earth with quite a lot of resources. At the moment, they are relentlessly using those resources to buy a lot of gold and silver for the reserves while dumping US treasuries. Andy believes that all these gold buying and repatriations will be followed by the revaluation of gold, and he agrees with Jim Rickards that gold prices could get as high as $27,000 per ounce. And it's not just gold. Andy is certain that central banks are equally interested in silver. They are not just as vocal about buying it as they are about buying gold. Do you agree with Andy's insightful analysis? Please share your thoughts on Andy's interview with us in the comments section. If you liked this video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks for watching.